Welcome to The Green Rush, a podcast about the intersection of cannabis, the capital markets, and culture. On a weekly basis, hosts Ann Donahoe and Louis Goldberg of KCSA Strategic Communications speak with the business leaders, financial experts, cultural icons, legislators, and generally interesting people moving the cannabis industry forward. This week, Louis and Ann are speaking with Michael Schwamm, partner in the Cannabis Practice at Duane Morris, LLP, one of the nation's leading law firms serving the cannabis industry. Duane Morris attorneys now represent businesses and individuals at every level of the cannabis supply chain. Their clients include state-licensed adult-use marijuana, medical marijuana, and hemp cultivators, processors, distributors, and dispensaries, both vertically integrated and those operating as standalone businesses, as well as industry investors. Michael knows where the bodies are buried, so to speak, which means he knows where the deals are and where the money is coming from. So don't sit back, lean forward. Now on to our conversation with Ann, Louis, and Michael.
Michael, thank you so much for joining us on the podcast today. You want to get as close to that as possible. We always say, eat the mic. Otherwise,
tastes delicious.
Well, I try, It's funny. You and I sit on New Jersey Transit almost weekly, and we shoot the shit about what's going on in the cannabis industry. And you are one of the lead attorneys in the cannabis space. And Duane Morris, as KCSA has become a leading communications firm, you guys have become a leading law firm in the space. So how did you get into the space? Why did you get into the space? What was that gestalt moment that you had that said, I want to bet my career on weed?
If we'd been having this conversation 3 years ago, you would have gotten a very different answer. It was really a confluence of events. As you had mentioned, Duane Morris was really, one of the leading, if not, the law firm, large law firm to go into the space early. And, the firm launched its cannabis practice probably about 5 or 6 years ago, and publicly, I think, 4. And I was a reluctant participant at first. I went to the internal meetings, but wasn't really sure I wanted to bet my future on weed. And then, I started to mention to a variety of my clients that we had this leading cannabis practice to gauge their reaction, and they essentially said to me, funny you should ask. We're trying to figure out how we, cash in on this, exploding industry.
What kind of clients were these?
Yeah, they were, one was a data analytics company. One created, stock indexes. One was, performed public relations for, the financial services industry.
That was not us, by the way.
No, it was not you. I mean, consistently said, we think it's a really exciting industry. Really, at about the same time, I was, asked to co-chair our family office practice that sits inside our private equity practice. And as I started to go to, these family office conferences, far and away the most popular topic and the only thing people really wanted to talk about was the weed business. And so it was, I would say it's either, a light bulb or a lightning bolt, hit me. And it was like, I'd be crazy not to, try to cash in like everybody else in this industry, given the real competitive advantages that I have and probably will never see again, being, at the forefront of an industry with a very limited competition. It just was unheard of. So, I had enough common sense.
And you guys are, Duane Morris is, you guys are over 100 years old. How much resistance among the partners was there when you kind of had this lightning bolt moment? And, did you have to get them stoned?
Yeah. So, I will say, people smarter than me really starting 6 or 7 years ago, started approaching firm leadership to say, can we do this? Can we do this? And it was, no, we don't think so. No, we don't think so. And, they systematically, approached our bank, our landlord, our malpractice carrier, the bar associations, and one by one, got them comfortable. And
How about the malpractice carrier is interesting because I personally had been denied life insurance through KCSA, and I have it now. But we had a few carriers who said, not because I smoke cannabis, but because I work in the cannabis space, that they did not want to insure me. So when you were talking to your professional service providers, how hard was it to get them to sign off?
I mean, I think it took them a little bit of time. I for better or for worse, was not part of those conversations. But from what I've heard, it took a lot of convincing and a very, very carefully crafted, engagement letter for all our clients. We attached the Cole memo to our engagement letter. We put in there that it's, it could be an illegal activity. There are limits on the scope of engagements. It doesn't really, frankly, prohibit us from doing most everything we're doing. But it is the longest engagement letter that we have. We have a far more rigorous intake procedure than any of their client base. It's the only industry where we do background checks on all principals, and if they don't come up squeaky clean, and there's not a really good explanation, for why there's a blemish, the answer is no. Listen, the last thing we want to see is a picture of a client on the front page of the New York Post saying Duane Morris client arrested for illegal activity. So it's been a process, but I think that people have gotten pretty comfortable. We initially had some resistance in some of our more middle America offices, but people have seen the growth of the practice. It's probably since we started at zero, so anything is rapid growth, but we're clearly one of the fastest growing practices in the firm, albeit among our 14 industry verticals, we're probably the smallest by a large factor, but we all expect this to continue to grow. We have certainly for at least the next several years a real competitive advantage on over any new entrants into the space.
Well, and there are only a handful of law firms out there, right? There's you guys. There's
you don't have to mention.
I won't mention the competitors, but there's two or three others, right?
But listen, every day somebody else is cropping up, right? And what we find often is some other firm is doing a deal. The client then in the space, clients then recognize that they don't have cannabis expertise, and so I'm working on I did two public deals where we were essentially cannabis regulatory counsel, and I'm now working on two more where we're providing the cannabis regulatory counseling. I think what happens by the end of the deal, the client says, boy, had I realized how difficult it was to manage two firms, we would have hired you from the get-go, but we were for one reason or another saddled with this other firm who's willing to get involved in the space, but just doesn't have that history in the background.
You guys do a lot of work in helping companies go public. You've worked on RTOs, you've worked on IPOs, but it feels like the capital markets are closed, right? There's this massive capital crunch that is going on. When do you see the window opening again, or will it?
I mean, if I could predict when they were open, I'd be in the wrong business. But I do agree. I mean, I think the volatility in the public markets has caused a lot of people to sort of step back and take a look in terms of whether or not they think that the opportunities are still there, certainly in the public markets, and are they better off investing in private? So we have seen and we continue to see a lot of money pouring into the private space. A number of our clients and contacts, who were running cannabis funds are now, raising, second, third, or fourth fund. The amounts are a lot larger. They're moving more upstream. So rather than being sort of early stage investors, they're going to growth stage, which I think is a trend that's going to create, a lot of opportunities on the buy side for some of these earlier stage companies that won't get capital. But yeah, I mean, it is, I think, consistently across the board, people are a little wary of the public markets.
Let's talk M&A for a moment. So in 2017 and 2018, there was a mass kind of rush to the Canadian Securities Exchange, or the Cannabis Stock Exchange, whatever we're deciding to call it. Exactly. And M&A was like the primary source of all of the deal flow, but it seems like a lot of those deals are blown up and they're not, they're not going what do you think is happening here?
rationalization to the market. I mean, I think everybody will admit that, that values were probably, slightly inflated.
Slightly?
Across the board in Canada and the U.S.
I think everywhere. I mean, it is. If you look at the industry and how they were trading, it's the only industry where there was essentially no consistent multiples, and it was a multiple of revenue, right? None of them have have significant. Well, most of them don't have significant EBITDA, no earnings, right? I mean, even if you go step up to EBITDA, which is sort of a difficult number to use when the tax number is so high, and nobody is banking on 280 being repealed anytime soon. In my mind, companies are trading at the potential value they might recognize if they fulfill their business plan, and which has a lot of variables in it. And so, if you're looking at it on that perspective, it's difficult to draw any conclusions in terms of where these companies should be trading. And I think recently you're beginning to see more of a sort of I hate to call it flight to quality, because a lot of the publics, certainly have quality assets. But I think that people view if you're already public now and you've gone through that bump, where's the growth potential going to come from, and so that maybe it's easier and better value to go back into the privates, where I think the values have come down equally as much.
That's for the investors, right? But if you're a public company, you look at Curaleaf or Acre. Curaleaf isn't a good example because they seem to be able to just keep going. But you look at some of the other companies out there, a GTI, which has dozens and dozens of licenses that they have not yet built out, and it costs anywhere from $1 million to $2 million to build out a dispensary. It costs $5 or so to build out a manufacturing facility, and it can be as much as $10 million to build out a grow. GTI has $500 million worth of need. Where are these companies that have this amount of money needed to build out their license portfolio going to get it?
Yeah, I mean, it's going to be interesting. I mean, I'm not sure where it's going to come from, and I don't want to talk specifics about.
Yeah, I'm not asking about clients,
because,
right?
Maybe because some of them are clients, but I mean, I think that I think up and down the industry, the lack of capital to build out licenses is really starting to come home. I see an inordinate number of business plans, coming across my desk. I just had one the other day from a provincial license holder, who had, 2 weeks to complete the build out, or they were going to lose their license. And, they woke up, and said, we need, $10 million.
And you wrote them a check.
Yeah. So I think you're going to see more and more of these, either distressed deals, hopefully, they'll start reaching out way before 2 weeks, because in this industry, you're not going to get a check written in 2 weeks. But, I think the point is there's a lot of licenses out there that are not going to get, become permanent licenses with the current owners, and they're going to have to figure some way to, unload them or partner to get these things built. And so, whoever has capital, wherever that might be, I think there's some real opportunities. I think that the problem is going to be, a lot of the capital is now moving away from that pre-revenue business model, and they want to invest into, established companies with revenue and something of a track record. So, I think we're back to the.
These are companies that should never have gone public. I mean,
these are public and private. Yeah. I mean, I think it's a consistent message. Frankly, it's probably, there probably are ways. It'll be easier to raise money if you're public. I hearken back to my old days doing, pipes and reverse mergers, right? And before I saw the light and started focusing more on the private side. But you can structure a financial equity product where the investor will make money, right? You get a discount to the public market price. You have a reset. The toxic converts. I think some of these companies may be forced down that route, which is horrible. But it's a way to get capital, and if you can deploy the capital in a manner really to drive growth and revenue and drive your stock price up, then it's not such a bad instrument. The problem is, with shorting and the like, sometimes you get people investing.
It's really hard to short these companies, though, because
Yes.
the floats aren't big enough. The lockup periods are still there, so the insiders haven't been able to trade out. Boris Jordan, who's the chairman of Curaleaf, as they were going through their RTO process, said, I would never do this if I had access to the traditional debt markets. But because we don't, I have to go to the public markets. If you were talking to the CEO or chairperson of a private company that needs to access capital, would you be advising them to go public in given what you have seen happen in the cannabis industry, or what advice would you give them if they needed capital today? And they're private.
Yeah, find some really rich friends.
Yeah.
It's a challenge. I think a lot depends on where they are, in their business plan, right? If they are, pre-revenue, it's getting incredibly difficult. I think we are beginning to see, and as you rightly noted that, there is no debt capital available at the moment. We are beginning to see, a little bit of breakage there. I mean, more and more folks are doing, equipment lending and equipment finance, so you can get sort of the more mobile of your equipment. It's still hard to finance a HVAC system, which is really expensive because it gets stuck on the real estate. But you see, you get real estate lenders who are willing to lend against the real estate. So if you're in the build mode, you have that avenue.
But that's very expensive capital.
Yeah, but it's less expensive than equity. I mean, right? Capital is expensive. Now, there've been a couple of debt funds announced recently who have some interesting ways to collateralize their lending. People are it's a field where people are getting incredibly creative to come up with ways to solve the problem. The biggest of which is the availability of capital that is less than exorbitant in cost. People could argue, right, if you're that if it's equity capital and it's expensive, but the valuation is really high, then is it really expensive? But businesses other than really early stage have always been able to attempt to leverage their returns by deploying debt alongside the equity, and we just haven't seen that here.
Michael, I wanted to pivot over to state regulations and kind of get an understanding of. Well, my question is twofold. Which states are you working in that you think have developed the most business-friendly structure? And then the second follow-up is, how are you guys consulting companies on being compliant?
So I'll take the second one first because it's a bit easier. It is. I think that
how do you keep up?
Well,
it just feels like such a moving target.
Well, so that is, the benefit. One of the more atypical aspects of a firm our size, and we have 800 lawyers in the firm. We have 160 lawyers in our cannabis practice, of which say 60 of them are like me, are spending at least a quarter of their time. So we have lawyers in most of the markets, the larger markets, with the exception of Colorado. So we have boots on the ground, who really stay up to date on the both state and, equally important, sort of the county and local markets, because this is one where you need you have to make sure that up and down the chain you are not losing any of your licenses for failure to comply with local zoning, host agreements, all the way up to state regulatory. So I think that really is one of our competitive advantages, and so I leave it right. I'm a transaction guy, so I lean heavily on my colleagues in New York, New Jersey, Massachusetts, Illinois, Florida, California, you name it, or if they're states where we don't have a local presence, we have relationships with smaller firms who are deep into the regulatory.
When you look at a state like Massachusetts, right, which voted in 2016 to go adult use. It is the end of 2019, and there are only a tiny handful.
Like 6, I think. Yeah.
Right.
Yeah.
So clearly their regulatory environment is structured to make it less business friendly. And it's not that it's a bad regulatory environment, because eventually the state will come fully online, but certain states have done a better job to ease that transition. I look at Nevada, for example, which, like they like almost overnight flipped the switch from a medical state to an adult use state, and it went seamlessly. And then you look at California, and that's a complete shit show. So from your guys' perspective, if you were counseling clients who had a portfolio of licenses, which states would you say, all right, build here first, because you'll get online and you'll start to generate revenue?
Well, it's a complicated answer, because some of the states.
I'm a complicated guy.
Yes. It is a you have to consider that, but you also have to consider what markets it may be business friendly, but it's not a large enough market where you really can make a living in the market. I think one of the reasons that everybody who's launching first is launching in California is, right, as quoted to me multiple times, it's the fourth largest economy in the world. So you can, right, you don't need to go beyond, if you're successful, you don't need to go beyond California. You can be a single state operator and don't face the issues of.
I call bullshit on that thesis, because we've had clients who have that thesis. We meet with people who have that thesis, and none of them have been successful. Not one client that we have worked with that was single state focused on said, you know what, if we can just dominate California, we can dominate the country.
Yeah, but I think it's too early to gauge success. What is,
I agree.
like,
none of these
they're not successful
how do you
yet.
define success? Yeah.
Okay, I'm wrong.
Okay. No, it's a valid argument. But
you're just taking a snapshot in time right now.
Right, and what is incredibly complicated, as an MSO, is the extent to which you have to replicate infrastructure in every state that you go into. So it's not, you may have to do it to create, quote, a national brand, if such a thing exists, but it's incredibly expensive. And so if you can dominate a large state, you don't have to go anywhere else, right?
Right.
And you have you have limited capital, so how do you deploy that? So so you have that on one end. On the other side, as difficult as Massachusetts has been rolling out licenses, and I think there's a real bottleneck. I have a client who's been waiting to get the first provisional license to cultivate and extract within Suffolk County, city of Boston. It's been sitting there since July, and they have they have everything else in place. They're ready to start building, but they're not going to build until they actually they've told yes it's going to go. But another interesting fact that someone quoted to me, and it's I'm just relating it, so I can't verify its accuracy, is there are 10,000 brands in California. There are 100 in Massachusetts. So if your angle is a brand, where do you want to be? And do you want to be sort of in the Northeast with limited licenses and less competition, or do you want to be in a very large state with ideal grow? It
depends on who you ask. You ask Kevin Murphy, and he's like, I want to be in the Northeast, right? I don't want the competition. You ask the CEO of Plus, and he's like, Psh, I'm all about California. And it's also the difference between the guys who are saying, I want to be a brand versus I want to be the store, right? That's the MedMen versus Candescent, strategy, which is, something that I also, think is fascinating.
Yeah. I think the other, the other thing that one has to think about is everybody is saying, have to be vertically integrated, show me another business that is successfully vertically integrated, because the skill set to do cultivation, extraction, sale, are completely different, and so it's not necessarily a guarantee you can be successful being vertically, and maybe you shouldn't.
Yes, that's a regulatory stricture, right? But why do you think the regulators did that? I have no idea.
I think there are a number of examples of regulators doing things that make no sense. I hope there are no regulators listening, but
So Shalene, don't pay attention to this.
Listen, I can understand the rationale that it's easier to regulate if you were regulating one person's seed to sale, and if they have processes in place, you can have some degree of assurance that it's consistent across, the sales channel. Whereas, if you didn't require it or you don't allow it, then all of a sudden you have triple the number of people you have to regulate. So part of it may be regulatory ease, but I'm trying to think of, the closest thing I can come to this industry is probably the wine industry, right? You have a whole bunch of different, vineyards growing wine, but different brands, different tastes, different varietals. Some of them own their grapes. A lot of them don't. They have contracts, so they can, they have quality assurance over.
Yeah, but
their
they
product.
don't own the liquor stores.
Right.
There's no Kim Crawford, wine store, which
Right. So,
only in my dreams, right?
Right.
Yeah.
They have 2 out of 3, and they don't. And in most cases, yes, a lot of them own their grapes, but a lot of them also buying grapes from other people. And there are reasons why they think they need to own their grapes, but listen, I have a client in the wine industry who he has no physical plant, right? He buys his grapes from somebody. He has somebody else.
Is it somebody who I think I know?
No. I don't think so.
Okay.
Yeah.
Okay. Is it a guy in town? Because there's a guy in town.
No.
Okay.
Yeah. He has a winemaker from another vineyard. Do his winemaking. He crushes it at a third-party crush. He has a mobile bottler come up. And then he has a third-party warehouse.
So he's just a brand.
Yeah.
Okay.
And yes, he's a brand.
You're trying to play like Short Hills geography here.
Well,
Louis.
there's actually a guy in Short Hills who does exactly that, and he makes amazing wine. Amazing wine.
But I used to say I'm going to compare this this industry a lot to the beer industry, where you're going to have 5 or 6 national brands and a whole bunch of craft ones out there. The more I think about it, I think it's more like the wine industry. But I think they're parallels, but and no one has required any of those businesses to be vertically integrated. So I think it's it's such a new industry that everybody is sort of struggling in terms of the best way to regulate. I think the most recent example that I throw out in terms of regulators not really understanding the market as well as they should is the whole vaping crisis, right? And if you start banning vaping, all you're going to do is drive people into the black market, where they're going to get sick, right? Because most of the product is black market product. But it's sort of a public reaction to the public outcry, and regulators thinking that this is the only way they can handle it. I think that's.
I think the vaping issue is the most complex issue that the industry has faced because of exactly what you said. First of all, it's illegal to buy an illegal substance, right? So then they're going to double make it illegal, right? We're going to put you on secret triple probation. It's like, no, that's stupid. But getting back to the regulatory structure here, especially in the limited license states, many of them say you can have 3 or 4 licenses in each category, in cultivation, in production, and in dispensing. And the intent there was to allow minority owners or other non-traditional market participants to have a role, but they are cash constrained. So then we get these managed service agreements, which the regulators are seeing through. So, you look at a lot of these MSOs who have based a large part of their valuation on these managed service agreements. You think something's going to happen there that like Massachusetts has taken a hard look at this. Maryland has taken a hard look at this. So how do you think this plays out?
I think that they're going to look through and see, where the economics are, right? And if you have one of these, these MSA agreements that have stripped out the entire profit, and listen, a lot of these were put in place. The origins of stuff is when you had to be a not-for-profit that owned the license, and therefore you had to figure out, if you were going to invest, had to figure out a way to do that, and so that really carried over into this it works for that, let's work for this. I think you'll get states that start taking a look at this stuff, and see if they're really, it's fine if your providing services are being fairly compensated to do so. If you are, however, stripping out everything so that the license holder has nothing, then I think it's, one has to begin to look and see, is this really a license? Who the license holder is. But I totally agree with you. If you are looking at the social justice aspects of this, none of the people who you want to have the licenses can actually afford one. Frankly, and I think, this is one area where I think Massachusetts is getting it right when they're looking at delivery. They're going to allocate the first set of licenses, to that community under the theory that of all the the aspects of the industry, delivery is probably the one that's least capital intensive to roll out. I mean, it's no means easy, and you need to find drivers, you need to do background checks, or you need to monitor. You have to have there's clearly going to be some security insurance. But among the various license holders, it's probably the one that's least capital intensive, and so maybe there are opportunities to do that. To some extent, I compare this to all the set asides for the WB, MBE, veterans, and you look at those, right? I mean, the 51% holder, it's a figurehead, right? I mean, and it's if it's a WBE, it's the husband's business, and he puts his wife in at a 51% holder, and then all of a sudden it's it's a WBE, and they're there in the background, and so I think that you're going to see
WBE stands for
Women Business Enterprise.
Women
Okay,
business.
Minority. I'm sorry.
I'm
sorry. Yes, I tend. Lawyers tend to throw out lingo, an acronym. So, I think that you will. You've seen a lot of that. In this industry, as people try to capitalize, on whatever they can to get the most points, in the application process. So they can win the license. I mean, the licenses are incredibly, expensive, but incredibly valuable. I mean, we started to see, people being offered, cash even before they've applied. It's like, you are you appear to be a well qualified applicant. So, if you go in 5149 with us, we will fund the entire cost, and throw some extra money at you. And this is even before, they've been granted a license. So it's an interesting business.
Can I ask a follow-up on delivery in Massachusetts? Do you foresee that state going through some of the same headaches that California is going through when it comes to the restrictions that municipalities and towns are able to say, I didn't want a dispensary in my town, and I don't want to have delivery in my town either, which is, kind of resulting in this cannabis desert, especially, in the middle, chunk of the state. Do you see Massachusetts going through those same headaches too?
I don't see how you avoid it, right? If you have a very vocal population in a community that doesn't want it there, the same way you can have dry counties, and I guess liquor delivery is I guess state by state, but I certainly think you're going to get local ordinances prohibiting it, and you're going to wind up with it's going to wind up in the courts in terms of whether you can, or can't, and what the state is allowed to dictate down to the counties and the towns and the like. So, I am confident that you're going to see people do it. I can't get a real handle on where it's ultimately going to come out. I mean, it's if it's a product that you're consuming in your home, right? They're not. These places are not banning you from, buying a bottle of wine and bringing it into your home, and they're not banning you from going to another county and buying pot and consuming it in your home. So it's hard to imagine the legitimate interest, other than just making it really difficult, for you to have stuff delivered to your home.
I want to go back to money for a second. A lot of the public companies and even some of the private companies who are involved and are license holders are just running out of money. And because cannabis is still federally illegal, they can't go bankrupt, right? Bankruptcy is a federal structure. So what happens if an MSO who has licenses in multiple states literally runs out of money and they can't get Chapter 11 or Chapter 7 bankruptcy protections? What's going to happen there?
It's it's a really good question. I mean, I think it's partially going to be a function of where. Right? You're bankrupt if you can't pay your debts when they come due, right? So first you have to look and see what, given the lack of available credit, the debt holders are going to be, essentially vendors. So you don't have
or Gotham Green or Torian or there's some ABL guys out there, but Gotham Green basically has a sword of Damocles hanging over MedMen, right? they will take the licenses from MedMen. But if you're
But they can't take the licenses because they can't. Right. So I mean,
exactly. So like,
could
how does this work out?
So right. So, I mean, there. If you are in a single state, you could attempt to work your way through your state, creditor rights laws. I think ultimately what happens is these are all done, as out of court settlements with every single major creditor, and then you let the little ones, sue you and figure out. But it's going to be a mess. I think that the good news is in most of these situations, the large investor has so much money at stake that if they think that this is salvageable, they will figure out a way to infuse some more cash into the business to keep it alive. The end result may be, that they wind up with an incredibly overwhelming stake in the company because they're the only ones willing to put more money in. Instead of putting it in at $300 million valuation, they're putting it in at $20 million. They're going to dilute the hell out of everybody else.
Right.
That may spawn a lot more legal work on the litigation side as people are challenging insider
and
dealings.
I can see you licking your lips.
So this is every aspect of this industry is incredibly complicated, and if you pull a string in one direction, something unravels, somewhere else.
Does safe banking address the concept of bankruptcy? I'm not familiar.
I don't believe so. I frankly haven't spent a whole lot of time studying it because what ultimately comes out of the Senate, if ever, is going to look nothing like what came out of the House. So one can speculate. And frankly, I think I think that all the Safe Banking Bank Act is really going to do short term is make it easier for people to deposit cash. It's not. I don't think it's going to create a great lending market because these businesses are not ones that, even if it was not federally illegal, would lend money to. Right? They're all highly speculative. They don't have free cash flow. No bank would ever lend to this business. Right? Banks lend to businesses that don't need money. These businesses need money, and they have no way to pay it back short term
or collateralize it.
Yeah, right. Yeah. Well, but assuming it was fully legal and the licenses were transferable and all that stuff, right? Even still, right? Banks do not normally go into a loan to own scenario. I think ultimately you will get mezzanine lenders and sort of other credit providers who won't mind owning the asset if things go bad. Will charge incredibly high risk premiums. To lend money, if they can figure out ways to collateralize them to protect them on the downside, which I think is sort of we're starting to see it in real estate, and because of it, actually, the real estate premiums on cannabis lending have come down a bit because there are enough people now willing to lend, into the industry, and so as supply catches up with demand, you can charge less because they can go to somebody else. But there you're lending in a building, and so if you can't put in another cannabis thing, you can repurpose it for something else. It may not be ideal, but the real estate's not going away.
The companies that went public over the last couple of years have done it with these, really unique structures when it comes to different share classes, favor founders over, everyday investors. For example, MedMen. What is your take on that?
We're doing one right now. It's nothing new. If you look at a number of the tech companies that, non-cannabis tech companies that have
like
gone
Uber.
public. Yeah, Comcast. A lot of them have, MTV, those folks. The control has always rested. They do, two classes, one that has incredibly high, voting rights, to embed, the founders with control forever. The Canadian publics and some, can and cannot be different. Some of them, particularly the ones that have gone public in Canada, to avoid, for securities laws being deemed to be U.S. issuers, often wind up with the reverse problem where you have the founders with lower voting stock, so that the U.S. persons don't own a majority. So it's one of the reasons we're starting to see people question whether or not the CSE is the right place to go public if you have U.S. assets, and are beginning to look to the over-the-counter market, because then you don't have to jump through all these incredibly difficult hoops.
Yeah, but you can't raise as much on the OTC as you can in Canada.
Well, I mean, that's to be seen. I mean, there is no liquidity on the CSE, and so
Richard Carlton, don't listen to him.
Yeah, yeah.
There's plenty of liquidity.
So there's if you do a reverse merger into a Canadian shell, there's an exit tax to leave Canada that no one talks about. Listen, there certainly are opportunities.
Oh, really?
Yeah. Yes. I can't tell you what it is other than the Canadian lawyers we work with say it's large enough that it's prohibitive, and so if you are a Canadian domiciled company, you will be one for the rest of your life. Yeah. No one talks about that. So you have to think.
Well, you did. Thank you for doing that.
You're welcome. I can't give you any of the specifics because we haven't sort of delved down because at the point the ones that we were working with had already made that commitment.
So, but if these for example, the companies that went RTO on the CSE want to and for some next year, States Act or Safe Banking Act passes.
They'll do a list. They'll
uplist to the NASDAQ or they'll uplist and they'll dual list, but they'll stay on the CSE.
Well, I mean, you could stay. You don't necessarily have to stay on the CSE. I mean, you just could trade here, but you'll always be a Canadian issuer, and that means you're going to have to comply with both Canadian and U.S. securities laws. So you have to have GAAP financials and IFRS financials. You have to have everything you do looked at by both U.S. and Canadian securities lawyers. So it substantially increases your compliance costs to be in Canada. If you're also going to list in the U.S.
So I want to get a little sexy here and talk corporate governance, okay? Because when I think sex appeal, I think corporate governance. Danny Moses, who is a well-known investor, a friend of the podcast, and also a personal friend, his number one indicator of whether he's going to invest in a company or not is looking at the corporate governance structure of the companies that he's looking at. There are some real big corporate governance issues in the cannabis industry. Is there stuff that you're seeing that you're advising clients saying, guys, that's not kosher, or maybe you want to rethink it? Like when you think about corporate governance, how are you talking to your clients about it?
I mean, yes. I mean, it's a fair point, and I totally agree. You have to look at where the management of these companies came from, right? If they are, as a lot of them are, Wall Street guys, who have previously been involved with public companies, they get it, and they want to institute the same corporate governance, policies that, you would see it, at any other publicly traded company. I think the issue is a lot of these companies are started by people who have no public company experience. They've been in the industry a long time, which already tells you something, right? I mean, it's these are people who are operating in a legal environment.
The gray market.
Yes, yes, right. Yeah, they're operating in a gray market. And so they take that gunslinger approach to them into the public markets, and listen, you're starting to you'll start to see the ramifications of that as things develop and they are taking actions that if not illegal are certainly counter to what good corporate citizens want to see, and it'll impact both their share price and their management, right? I mean, I expect a lot of these companies will see, as they try to raise their next rounds, we'll see turnover in management, to the extent that the people there don't have public company experience. And I think in this industry, it's vitally important that your management team, they don't all have to be, but you have to have people at the top, who have that kind of experience, because you're running a public company, and it's very different than running a private company. But even in the private company, I think you have to recognize where some of these people's backgrounds are, and they tend not to be rule followers, otherwise they wouldn't be in this business in the first place.
2017 into 2018 was the year of the RTO. 2018 into 2019 was the year of the M&A. Do you think that 19 going into 20 will be the year of the management turnover, that we'll see significant turnover at many of the MSOs? Because most of them were started by financial operators and not necessarily operators. And the ones that have the operators that come out of the illicit market, don't necessarily know how to run a public company. And the boards are going to start to get furious, not necessarily at the lack of top line growth, but as the share prices plummet, and most of these companies are off 60% for the year, the boards have a fiduciary responsibility to the shareholders to push management, even with the supermajority voting rights. Do you think that we're going to see big turnovers at some of these companies? I'm not asking you to name names.
No. I mean, it is. I do think it's going to happen for one of two reasons. One is, boards are going to be under pressure, both because of stock performance, and they have to do something, as well as, if missteps are taken by management, they may have no choice. I also do think that we are going to see significant consolidation in the industry. And, one of the reasons for consolidation, and this applies equally probably to public and private, is to acquire, human capital, right? I mean, it's, we're doing one now, that happens to be, a distressed acquisition in California, where our client is buying, a company at a valuation that's a lot less than the last round that they raised money at. And they essentially said, we're buying this company for really three reasons. We want their people, we want their brands, and their genetics. The licenses are a distant fourth because there's some duplication. But I think that it's difficult to find quality human capital, and there'll be a consolidation anyway. But I think that will be one of the drivers. Is this person has built a great company.
Look,
really could use them.
That's why Forefront merged with Cannax, right? Because Forefront looked at what Cannax was doing in Washington State and said, these guys know how to grow better than anybody else. They know how to make better products. And in a hyper-competitive market, they have an almost 10% market share. We can take that and put it across our entire portfolio. And if you talk with Josh Rosen or you talk with Chris Crane, they say that, they think that they're going to win because of that operational excellence that they bought in Cannax.
Yes, and we represented Cannax in that deal, so obviously they thought the same way, right? I mean, it's been, you do want to align with who you think the survivors are here, and it is I think everybody agrees that there are probably too many companies out there, and everybody is positioning
themselves.
It's still
so early, though. You know,
Well, but I think when I'm not just necessarily saying, public. I think, there are a lot of companies this industry probably can't support long term I don't know how many cannabis companies there are out there.
Hundreds and hundreds, yeah.
Right. And I think, most people are building their company, they're either going to, buy or be bought. And, it'll all sort of depend upon, what the offers are on the table, and is it time to cash out, or is it time to go on a buying spree with equity, so you don't have to spend cash, and 1 + 1 = 3.
That's what that's what Curaleaf has been doing. Like you look at the Grassroots deal, right? That was all equity. It was $1.5 billion, $1.2 billion, $9 billion, and I don't know what the value of the deal is today, but they bought it with equity, and and they did the same thing with Select, right? So, they've been very smart at saving their cash and using it to open up stores. All right, and your turn. I keep talking.
To the surprise of no one.
You should hear him on the train. I mean, it's, by the end of our 45 minutes, we have people surrounding.
I moved 3,000 miles. So
that's actually true. Yeah. It has happened that there have been times that Michael and I will be on the train, and there will be people standing around us listening, rapt, because we are talking about this industry.
And then we start getting questions, much like this.
Oh, really?
Yeah.
Well, let's continue on the capital trend, and we've talked about the debt equity. We haven't really talked about the sale lease buybacks, which is kind of a new trend now. What do you think is coming up next? Where's the growth in operating capital coming from in the next 12 to 18 months?
Lewis is going to start writing large checks.
Shorter than that.
I think it will continue to a large extent come from and I'm talking sort of pre-States Act or something that opens up the industry to the institutional investor. I think again, an interesting statistic that I can't vouch for, but 75% of the money funding the industry has come from family offices. I think you will continue to see them, put money into this space. I think that they will, they, like a lot of the other money, will become smarter about where they want to deploy, and either will, invest into funds or will invest into companies that, have, are further along in their business plans. I think that, and I can't tell you which one, but there will be some institutional investor who takes the plunge because they just.
I'm going to bet on BlackRock, but that's me.
Yeah, I mean, it could be right on from the real estate angle, particularly, right? I mean, there are safer ways to get into this space, in people's mind. I don't necessarily agree. I don't think it's a highly risky industry from how they view it as as enforcement. But I do think you'll and once one of them does it, I think it will start they'll open the floodgates. I heard anecdotally that one of the Midwest state pension plans has put money into a cannabis fund. I haven't been able to verify that yet. That would be very interesting. And I think you will begin to people like Torian, will figure out ways, to create, debt instruments where they're protected. It's difficult. But I think people are very creative in this space, and it's one thing is for sure. If there's an opportunity and people and someone has money, they're going to find a way to put that money to work if they want to. And it's a lot of this I think is sort of educating the investor public in terms of what the risk really is and what they should be concerned about, and not hide behind it's a it's a sin product, or B it's fairly illegal.
So we've taken a lot of your time, and you've been really generous. We've got 2 more questions. Let's talk about failure, right? I always ask this question because I really believe that success comes from understanding how you have failed in the past, and you are clearly a successful guy. So can you talk about either a personal or professional failure that shaped you and catapulted you forward into becoming so successful?
Absolutely. So, this one for me is relatively easy to pinpoint because it really did change the way I practice law. I had in, 1998, I took one of my clients public, and they were one of the early adopters of desktop video conferencing. Back in the days when you could do small IPOs, we did one, $40 million. The company quickly began to tank after the public offering because all these, everybody else came out, with products, including, this small company called Microsoft. And so my client / founder / CEO decided, he didn't want to be part of a public company anyway. So he went off, in 1998 to start a startup in the telecom space, providing essentially private non-dial tone, private data networks to medium-sized businesses in Class A office buildings to provide them with things like high-speed internet and what has come now commonplace, IPTV and IP telephony and data storage and data backup, which then was fairly difficult for a small enterprise because if most of them had dial tone, dial up, and if not, the DSL. And so he convinced me after he raised $4 million to come join him as his chief counsel and chief operating officer. And things went really well for a year. And then 9/11 happened. We couldn't raise any more money, and I was stuck at a startup that couldn't pay payroll, that couldn't pay vendors. But it also, early on, it taught me, the lawyers who are listening to this will understand it. Most others won't. The first thing he said to me when I joined him was, we have to reorient your mindset because you're going from a revenue line item at a law firm when you bill by the hour to an expense item where you need to justify yourself in a whole bunch of different ways, but that doesn't include billing hours, and so you have to be productive in whole different ways. But
on the PR side, we have no idea what that means. Yeah. I'm kidding. It's the same exact model, right?
Yeah. But if you went in house to a brand, right, it would be very different, right? You're not billing. But going through an organization, particularly as it was failing and we had incredibly limited resources, I really was forced, to, reorient, the entire way I practiced law. And it was incredibly difficult to, to go through a failing, enterprise, partially of which, we all sort of took it upon ourselves as partial reasons why, it failed because, had we done things differently, I probably wouldn't have been sitting here today, and I would have been counting, my equity. But, I really do believe in the adage, what doesn't kill you makes you stronger.
Final question, and again, thank you so much for being so generous with your time. And you're
not billing us for this hour, right?
No, and Louis well knows it's like it is amazing how all of a sudden I'm the cool person in the neighborhood, right? I mean, Louis and I talk about it all the time. People who would never give us the time of day now want to spend hours with us talking about cannabis. So
that was the biggest backhanded compliment I think I've ever gotten. It's like, Louis, you are such a complete nerd, but because you're in the cannabis space, people like you.
Well, same with me. My kids now think I'm cool again, right?
No, my kids do not think I'm cool.
Well, my kids are older, right? And
okay.
My kids are consumers of the product. So, but yeah, my wife walks around calling my husband the pot lawyer. I mean, it's pretty funny.
And I've seen her wear the T-shirt that says that too.
Yeah. I'm
Is
sorry.
that really a T-shirt?
No.
Oh,
Yeah.
Sorry, Ann, I interrupted.
Cool.
See, that's the bad dad joke in the cannabis capital markets culture and bad dad jokes.
Yeah.
So we always end the pod with a question. Like we said, we're in PR, so we think about life and headlines. If you were to open up the front page of the Wall Street Journal tomorrow and see a positive story on this industry, what do you want that positive story to be, or what do you think that the mainstream media is missing in the world of cannabis?
Wow. I guess and I don't know if it's necessarily mainstream media or just the industry in general. The lack of education for the consuming public and the industry, right? I mean, there is no consistency in delivery of message in terms of of usage of product, dosage of product, what does what, and so the consumer is really left to figure out on a trial and error basis, which is never a good end result for any industry, right? I mean, you want to have the better educated your customer is, the better they can be an advocate for your product. When you as a consumer have no idea what you're buying, when you walk into a dispensary and the salesperson has no idea what the product is that they sell, or which does what to whom, it's never a good thing. And so I think this is I would love for this industry to grow up faster than it has and start regulating itself.
And it's growing fast.
Yeah. And listen, and they're clearly growing pains, and there's a lot of money there. There are a lot of really smart people. It will get there, and so I know it's really not the answer to the question, but I think that's sort of the one of the things that I struggle with is how we, because we very much like you guys view ourselves as stewards of this industry, and do a lot that is not necessarily driven to our bottom line to help the industry grow. So I would love for somebody out there to start a education program to educate the all parties in the industry.
Awesome. I got to ask one other question. So when we were early, we've been in this space for 5-6 years officially. In the early days, we got paid in cash, and occasionally somebody offered to pay us in kind. What was the strangest way that you guys ever got offered to? And in kind, literally kind bud is what I meant. So how have you been?
Everybody knew what you meant, Louis.
Yes. Yeah.
Dad joke. Dad joke. Okay.
Fortunately, I have never, the jokes the questions we always get asked, I think, only half in jest are, will there be free samples? Because we host a lot of events.
Yeah, we get them all the time.
Right. I mean, I think that,
Are there?
I guess it depends where. No, we never have free samples at our events. We have people trying to illicitly pass out free samples, which is a whole other issue. But it is.
You slapped me on the hand once, just once.
I must say I have never been offered anything. I've never been offered to be paid in cash or in kind. We always get paid. We send out invoices. The money shows up in our bank account by check or wire transfer. I mean, fortunately,
you don't want to fuck with your lawyer.
No. Well, and it's also I think that we have gotten and have always been, as I said at the top of the show, very cautious about the clients that we're bringing in, and so we would not bring in one that didn't have a bank account, and was collecting cash. It's just not we're probably not at that stage of their existence, not the right firm for them, and they're better off with one of these boutiques, and they can figure out with that boutique how they're going to pay them. But I don't think I've actually ever run across outside of the the criminal defense lawyers anybody who's actually had an issue with I mean, we may have issues of whether we get paid, but not an issue of how we get paid. And if they're going to pay us, they figured out ways to send us money via the via the banking system.
All right. Thank you so much.
Oh, it's my pleasure.
Really appreciated that. If people want to find you, where's the best place to find you?
You can go to the firm website if you can't remember the spelling of my name and email. My firm is Duane Morris, DuaneMorris.com. You can email me. It's probably the best way to reach me at mdschwamm, that's SCHWAMM, at DuaneMorris.com.
Awesome. So
Thank you, Michael.
My pleasure. It's been a pleasure.
Our thanks to Michael Schwamm, partner in the cannabis practice at Duane Morris.
I do other things as well. It's only a third of my time.
As always, thank you for listening. If you want to chat with us, you can find us on Twitter with the handle @the_greenrush or on Instagram @thegreenrush_podcast. You can always drop us an email, shoot me some hate mail. I love getting it. You can do that to greenrush@KCSA. As always, we are looking for feedback and guest ideas. And don't forget to subscribe to The Green Rush in your favorite podcatcher. That's one take, Shay. Truly one take.
Cannabis! Cannabis!